Hey, it's Jack from Alpha Charts with a state of the market video. Today is January 6th, 2024. Before we get started, this video is for informational purposes only. These are not recommendations to buy, sell, or hold any stock or security. And I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. All right. Thank you all for watching my video. If you haven't done so, like and subscribe to my YouTube channel. That will help me out some. Also, you'll find me on Twitter at AlphaCharts365, posting all the time on Twitter. So check me out. You'll missing a lot of content if you don't follow me there. And if you really like my content, I do run a subscriber service through Twitter. It's an educational service where we give in-depth market reviews, focus lists, watch lists, midweek videos, midweek market notes, end of week market notes, annotated charts, daily market scans, posts just for subscribers on my thoughts on the market, chart requests, and so much more. So if you're interested, it's $10 a month, super, super affordable for everybody. That's why it's $10 a month. Just click on at Alpha Charts 365, subscribe, and you're in. Again, I think the value there is immense for what you're getting. We've been really, really good with the markets as far as getting aggressively long. By the way, my purpose of this, right, before we even move on, is, especially if you're working full time, to do, a lot of the research and work for you, even though in the end you make the decisions on if you want to buy or sell or whatever you want to do. I'm doing the research, saving you an immense amount of time. And hopefully we are going to be aggressive when the markets are good, and we're going to be pulling back when the markets are showing signs of weakness, right? And when I say pulling back, meaning going to cash, right? Shorting if that's your thing, but going to cash mostly. All right, so let's talk about this video. SPY has a beautiful base that it is still working on, hasn't really broken out yet. And we're going to zoom in to this area. And we said, if you remember, that this bar and this bar looked very, very similar, and winding patterns. And now we are in this area right here where the 23-day EMA, which is right here, held, right? 2 days in a row it held. That's constructive. Now, do I know if that's going to be the end or if this is just a pause before it makes another leg lower? We don't know that. I think that it's likely, because we have a little momentum to the downside, that we are going to go another leg lower, but no one knows that for a fact. And the selling has been, for the most part, orderly. So I don't think that that's like the end of selling. Yeah, we no one really knows, right? But I wouldn't be shocked if we come back and retest this, 455 to 460-ish area right there. That's not that much lower, and another 2% lower or so. Yeah, and let's get close to 50-day. That's, I think, a real possibility. All right, so that's just my thoughts on SPY. Now going to the weekly, you see the price was down 1.55% on the week. It was a holiday shortened week, so the first 5 days of the year usually are real important and kind of dictate the feelings for the year, the outcomes for the year in a lot of ways. And so, being, if we stay negative on the first 5 days, which we'll know next week, that makes me a little more cautious. I can't say it's absolutely, there'll be good times and there'll be bad times in the market, right? There's gonna be 3 times a year where things are gonna be really good, and there's gonna be other times where things are gonna be really hard to trade, like we are now, in my opinion. So that's going to be a constant. But overall, when you take a step back and say, okay, on the year as a whole, the first 5 days, the first day, the first week, and the first month of the year tend to be indicators in some respect for outcomes for the rest of the market, for the rest of the year. And so we are, again, it's just a negative feel to it from there. But we'll see what happens. Right? Like I said, during the 3 good times of the year, we're going to get aggressive and we're going to be making money, hopefully, those times a year. And when things pull back, hopefully we'll be either neutral or short the market, right? That's the goal. Anyway, so you can see on the weekly, though, down 1.55. And the Qs, which were probably down more if I had to guess, we're down 3% on the year, right? That's a pretty big move down. I don't think that's going to be making it up in one day, but you never know. Looking at the daily on the Qs, we can see again has a beautiful base. It did break out to all-time highs. It came back in. Now this one did not show this, did not hold the 23-day, which is interesting. It's below it. So you kind of say this area right here is maybe some similar to this area right here. Again, I think that there's probably going to be at least a tag of the 50-day. Again, it's not that much lower, but it is lower. And depending on how it gets there, another 2% or so, right? We'll see. So I'm not like overly bearish at this point. I think the 50-day will be an immense test because it lines up with a support area, the prior support area, right? Prior resistance, prior support, right there. So that's going to be a really important test. We'll call it 390-ish or so, about roughly 2% lower. And so I'm looking forward to see what happens when it gets there, right? I'm not in a rush to put money to work right now. Anyway, so we'll see what happens there. I didn't look at the RSP. Doggone it. RSP equal weight S&P. We're going to go backwards for a second. You can see holding up a little bit better, but is back in this area, right? This 155-ish area. I mean, that's the one that's got to hold. On the week, it was down 1.32, so very similar to the SPY, which was down 1.55, maybe a little bit less. And we're going to jump to the equal weight Qs, was down 2.8. Again, a little bit better than the regular Qs, right? Equal weighted. So that just tells you that the mega caps, larger names, are getting sold faster than the smaller names. That's it. Again, the mid caps, MDY, they were down 2.41. And you can see how it tried to break out above this 500 area. It got stuffed again. And again, on the weekly chart, you could absolutely see it from 2021, how this area, this was a whoopsie, has been just a big problem for the mid caps. Big problem. We'll see if it can make a higher low here, right? Maybe around 467, maybe some, there's a weekly chart, but you see one, two, this. Yeah, you have a little lower low right there, but a higher low here, and we could have roughly higher highs and higher lows. That could be like a whoopsie breakdown right there. So we'll let one of them pass. But you have higher highs and higher lows, and maybe a real breakout will be coming in the first quarter or second quarter of the year if it can make, again, hold 475-ish. Let's look at the daily to see how that looks. So that's pretty nice looking, actually. Yeah, so here's the daily chart. And you can kind of see the higher highs and higher lows kind of showing up there on the chart. And I think, yeah, 475, 466-ish, that's the 200 days starting to move higher. So pull back here would be still longer term bullish, but I think from my time perspective, we have to see, I don't want to be involved in it during this pullback time. I want to be involved as it finds support and starts to move higher. And you can see how it's not quite there yet, right? Not quite there yet. False breakout. So right now, yeah, we're looking at, maybe between 470 and 475, something like that. Again, to the 50-day, we're talking about a 4.5% pullback. That's a decent pullback, right? I want to avoid that. If it does get there, no one knows. And let's look at the IWM. There you are. And this was, well, disappointing, of course, because, it just got stuffed again in this whole range. On the week, let's just jump there real fast. It was down 3.73, so pretty strong stuffing, right? The last 2 weeks, 0.35 and then so that's 4% over the last 2 weeks. That's quite a bit. And then, it's losing its 23-day. We don't like that. And it can move. It can move lower. It could get to that 185-ish area, close to the 50 and the 200-day on the daily chart. That's very possible. Would it still be bullish? Well, it would have a higher low, and that would be the bullish part. But my goal is to avoid this and participate in whatever comes after that, right? That's my goal. So we will see what happens on IWM, but I think, there's no signs of support yet. And this to me looks more like a pause, letting moving averages kind of catch up and working off, this quick move lower than anything else. All right. So let's see what the indexes sectors did. Starting with XLF up here. And you see XLF looks very different than those other charts that we just looked at, right? Than the index charts. And that's because we're seeing a lot of relative strength in XLF. If you like these videos, my stocks to watch video tomorrow will have some banking names on it. You might as well watch that too. That one usually is about 10, 12 minutes long and has about 10 names, 10 names, a dozen names on there that I like. Again, my subscriber group gets a lot more names and options and stuff like that. But the one I give out for free for everybody, it's pretty good, and there's a lot of great ideas on that one. So check it out. Comes out tomorrow. But looking at XLF here, really holding this 9-day and just grinding higher, doing again nothing wrong. Looking at SMH, which is one of the more important names out there, and there you are. So SMH broke out, led the market, there's a retest, broke out, and now it's coming back. So this 160-ish area, really important. Really, really important. 160, even we'll go to 155 to 160, this general area right there, where it's purplish on my charts. Right. So yeah, I'm okay with this. I'm okay with another leg lower. But that's where I want to see things dig in right there. And as we go lower into this area, I'll be watching for things that are holding up better. I don't know if it'll be NVIDIA or some other small, semiconductor, but that's what I'm looking for. But right now, it's hard for me to say this is a bullish looking chart. I think maybe in here, 150, 8-ish or so, 160-ish, something like that, right around the 50-day. That's the area that I'll be looking for potential opportunities. Overall, though, nothing is saying that in the short term, things are going higher. On the week, they were down 5%. Again, much greater. They lead to upside and they also are leading to the downside, right? So when we see this change, chances are the market's going to be changing. So that's a good point. Looking at the XSD, we're looking for a breakout here of this area. It tried to in this range, couldn't really do it, and it was down 7%. It just shows you, right? They were selling every semiconductor under the sun, right? Compare that with XLF on the weekly, which is up 0.32, right? XSD, which again, I just lost in my AR, again, looks much, much different. And looking at the daily, we can see that 200-ish, 202 is a big deal. No reason to think that it's going to hold at this point, but it is a place of interest with a flat 200-day moving average. And you see this is just, right now, you just hope the bulls want this area to hold for a higher low and then maybe a breakout. That's it. Let's look at ITB. This is the home construction and housing. This was the pennant that I said the direction of the break here would really lead the market. It broke lower. It should have broke higher because the prior trend was higher. It didn't. It did have a nice little bounce back on Friday, but at this point, it's trapped between the moving averages, and now, the lower is more likely, and maybe a retest of 90 could be in the cards. We'll see. It's about 6 or 7% lower, decent amount. But that's where the 50-day is. It doesn't have to get down there, but it's the next level of support that I can see on this chart personally. So that's ITB. XHB probably looks exactly the same. It does. And it has a very similar looking area right around this, 86-ish area or so. Potential level of support. And let's be honest, even if it comes down here, and if this support holds, it's still a bullish looking chart in general. Longer term, right? It has a beautiful base, retest of the base. If it holds, everything's fine. Longer term. Transports, IYT. We were talking about this trend line, long-term trend line. Looking here, it lost it, obviously. Again, maybe the 245-ish, 250-ish, somewhere in here. Maybe that's a spot it can hold. We'll find out. I don't want to guess, really. We don't know. I do think, again, from what this chart looks like to me, there may be another leg lower. That's it. And XTN transports. This is the equal weighted. The other one was cap weighted. Again, same idea. This 76, 77 area where this 50 and 200 are, that's an area that I'd really like to see hold. Maybe it fills this gap. Who knows? All right. So that was, the sectors. Now, financials look fine, but everything else looks like they are pulling back pretty hard. So the sign of the market, right? It's about the market's feet and the feedback we're getting to us. I'm not overly bearish, but I'm not bullish at all. I'm in a neutral position right now. Let's look at the internals. What does the VIX say? The VIX is still low. It's under 14, right? This is still in a bullish range. It did make higher highs and higher lows here. I wouldn't be shocked if, the next leg down, we see some sort of spike up in VIX and volatility. It's what we've seen in general down in this area, right? Over time. We don't know exactly when that's going to happen, but that's what we've seen over time. So that wouldn't shock me, the VIX of 20, right? VIX of 20, 19, somewhere around here. And we would still be in a bullish time if that happens. It just shakes out all of the excessive bullishness. That's what it does, right? Increased volatility. Looking at the percent of days, stocks above the 50-day, we talked about it being up here and potential pullback coming. Well, we're starting to get that pullback in the percent of stocks above the 50-day. You know, it doesn't. A lot of times we see it pull back further, right? Very rarely do we see it. That's it. So I still think there's a further pullback. I'm not saying it has to come all the way down here, right? It could come to, 30%, 50%, whatever, but chances are there's a bigger pullback, or at least another leg lower coming. I don't think this is enough yet. Put call ratio, we're seeing maybe a lean to the bearish net side, but we have not seen overextension. Would love to see something in this, 1.4, 1.5 area. That's an extreme measure in my books. I put these lines on here. No one else did. That's where I'm judging the market. And I just don't think we're in extreme bearishness yet. I think there's still people holding out hopes. And then I forgot to do credit spreads, so let's do them right now. Credit spreads. Again, nothing is overly concerning in credit at this point. So I'm not too worried about it. The dollar. The dollar is the key, I think. Right? So you see how we talked about it holding this general area. It did. We got to move higher. Obviously, stocks went down. We'll see if this continues higher or not. Again, if it keeps going higher, then that would be a negative on equities in general, right? It makes it harder for equities to move higher. We'll see if that continues a lot. I mean, this is a big candle right here, right? And a lot of indecision in that candle, right in the area of potential, support or resistance, I should say. So we'll see if that continues higher or not. But right now, the change in trend would be to the higher side. And so again, maybe it gets to 104.5, maybe it gets to 105.5. We don't know yet. We don't know what it's going to be, but if it continues higher, that'd be harder for equities. And then we'll just look at yields, even though, it's tough to know what's going to happen here with the yields, but we're back above 4. And now we have a significant area right there that showed where interest rates really started to rise right over here. And so we'll see if that continues, right? Break it back above, and we could get back to that 5% level. I mean, rather quick. These interest rates are moving fast relative. I mean, that's a fast move right there. This is more of a normal type of move. So we'll see what happens there. So let's sum this up and finish this video. I still have a cautious stance. Wouldn't be shocked if we see another move lower. Don't know if the 50-day will hold or not, but there is an area of potential support below this 455-ish area is what I'm watching. It's about 2 to 3% lower. Again, it's not immensely lower, but if you're in certain names that are going down 2 to 3 times that, 10% move is going to hurt you. So just be careful out there. If you haven't done so, check me out on Twitter at AlphaCharts365. Again, posting stuff all the time, so make sure you follow me there. And my educational group, listen, at the end of December, when I gave the free view, we started talking about being cautious and raising stops and taking profits, right? That was at the end of December. January's been down. Let that speak for itself. All right. Hope you all are doing well. Take care. Have a great day.